Trading Lounge, and I just need to point out that I had a few technical difficulties this morning, and I've sort of lost all my sort of wave counts off this platform. I've tried to fill in where I can, so it will be a little bit sort of blank, but as long as we get the sort of message. And yeah, so look here, we're looking at the daily chart for the S&P 500, and it's popped its head up above the 1650, the medium level there. And our target point is the 1660 there, as on the cash market this wave A here would equal wave C at that point on the cash market. But the main point is that moving up above here and creating the first high above the level, and then coming back to retest the 1650, and then making a decision to become the support or the resistance there. That's what we're looking for. As you know, we were thinking that this particular move to the upside here would be in an A wave, a B wave, a C wave here, and then a 5-wave structure to the downside here, moving further down towards this direction here to complete this A wave here, this A, B, and C wave for the B wave here, and then down for the C. That's what we think, and there's a few reasons for that as well, in terms that this move that just on the 4-hour chart here, sorry about that, this move through here as the A wave was quite quick and swift. And the C wave here is started off reasonably quick, headline driven, but then it is moving higher, but it's moving up slower through here. So it's not giving us the indication of a third wave pushing higher through there. But also too, we need to be mindful of what we're looking at through here as well. And as I mentioned before, this particular move down through here can be counted as an ABC through here. So it is possible for that high to be taken out through here. So if we do get support on the 1650, then we're long at the moment, and we'll stay partially long. But it really is finding this 1650 as the support or the resistance. The other side to this too, obviously, is the Dow Jones as well. So the Dow Jones at 15,300 here is the top of minor group 1, so 100, 200, and 300. And we know that if support is found on top of group 1 after it's tested lower, which it has, then we can straight away look at the 1550 as being the target point there as well. So we also know too that once it arrives at 15,300 there's two types of corrections that it can do at that point there. One is I just call the overshoot. The distance it goes above will be the distance it goes below. The other one is the classic trading levels pattern, where it has its arrival, reaction, first high above the level, and so forth. One way or another, it'll have some type of correction across here, and it's after that corrective pattern will it find that as the 15.3 as support or resistance through there. So we'd kind of expect it to look something sort of like this here. And then if it's going to be bullish, then it would have some sort of thing like that through it. If not, then we would be looking further to the downside in that case there, obviously navigating through the other levels through there. So anyway, let's just see how this unfolds. That's what we've been waiting for. We have our wave count, but the price action, not so much the price action, just the fact that, just the trading levels, I guess it's not putting the trading levels and the Elliott are not putting us in the same boat. They're different at this stage, so we need for them to play out as such. The Australian market here, as you know, if we just have a look at it on the daily chart first here. So we know we've got the 5,000. We're looking at this this move down through here is 5 waves, so that would give us a 3-wave counter trend, and that's kind of what we're looking for here at the moment. We're looking for something like that's what we're looking for basically, and Wednesday can produce the midweek high, Thursday the bear day, and then if that's on lower volume, then we'll see another 5 waves up. So basically what we've been looking for is we've been looking for little 5 waves up like that. And the other point about all this too is that, you know, it is the banks that are creating this situation. So when we have a look at CBA for Westpac, doesn't really matter. They're all pretty much same really. We just got to work to their closest, largest levels. So when we're looking at Westpac here, sorry about this, you know, we can see that the 30 there would be the, you know, the resistance point, and each bank will have their own little thing, and they'll all match up to the XXJ or XFJ. But the same story goes as well, is that we are trading long through a you know, a corrective rally, and we need to know you know, where the resistance points are, and the wave count, and as I mentioned, the XJ has been created from the banks, and we'll be looking at, you know, something, you know, looking at this little 5-wave structure here. The 50-60% retracement level is, you know, this kind of situation here. Once that's complete, then we'll see further downside in these banks as well. So that would also be with the XJO as well. So some of these be trading different banks, but they'll all have this sort of same story here, and that would relate, you know, to the XJO. So essentially, that's what's happening there. The commodities. Let's have a look at the commodities, because there's the opportunities in the gold market and Okay, I'm going to start with oil, because it's going in a different direction. It's going in line with stock, as it normally does, and as you can see here, it's worked across the trading level number 8 here, the 98, some minor trading level, and it's the classic pattern where we've got the arrival, the reaction, the first high above the level, and then the correction through here. And then it does appear that we've got a little 5-wave structure to the upside here in terms of the 1, 2, 3, the 4th and the 5th here. So if that is a 5th wave, if we got 5 waves there, then what comes after 5 waves? That's right, the ABC correction comes after that. So we would be looking at something, an A and a B and a C wave coming back and retesting this again before we see sort of further upside through that. But you would also need to use the levels through here as well once that's occurred there. So the midpoint 50, the 30 is subtle, but it is really quite important, that 30 there, because it's the top of group 1 and subgroup 1. So if this tests below here and then finds support on top of the 30 there, then you need to go along from that point there. And even if it stays above here as such, then it's still supported, and you can still go along from that point there as well. But the other point of this too is that in Richard Wyckoff's terms, I guess, this would be the accumulation phase across through here. So the distance across here is normally equal to the distance in price to the upside. So as you know, we're looking for this market to move and test into the 100 area through here. So it's all looking quite positive for the oil market. The copper market, or base metals, just looking at this, I don't have the wave counts on here, as I mentioned, sort of lost them. But what we've been looking at through here, as you know, we've been looking at a move coming down through here, and then we've been, you know, over the weeks just looking at this sideways pattern through here, and it got a little bit complicated, as I said, and got a bit sort of lost in there in its sort of own way a little bit. But we could see that it was finding the we're spending more time under the 320 here, which is the pivot within group 1, 10, 20 and 30, and finding resistance here in the pivot of group 1 normally sets the tone for the next major trading level, which would be the 3 down here, the 300 or $3, depending on what contracts you're trading. So what we've seen here overnight is we've seen this really sort of fall out of bed at this stage through here, and it'll work lower. The 10 is the next minor trading level. These are all the sub levels in here, the 1, 2, 3, 5 and 8. So it's just working through the 5 at the moment. Once that becomes the retested resistance, then we'll see it slow down and bounce around into this sort of area through here. The wave count on this could be down for 1 here, ABC for 2 here, then down for 1, ABC for 2, and the third wave unfolding further down through here. So plenty of sort of selling pressure there for base metals. The gold market as well, and the silver market has also moved down as well, finally moved down. There's a couple of counts here that I guess need to be talked about, but both counts are to the downside. So that's sort of the good news, I guess. First of all, I guess that in looking at this, we could end up with a triangle pattern through here, okay? So, we're looking at this as being a wave 4 here, but this could also be, in terms of triangle, would be looking at, well, the A wave up to here, the B wave to here, the C wave to here, the D wave to here, the E wave to here, and then we go down. So that's a real possibility there, okay? The other side to this would be that, if I can just move these for a moment, because we need to look at the trade setups in this sort of area as well, is that we can have this as wave 4 through here, and then that would leave us with this. This is a possibility of this move down here being wave 1 and this being wave 2 here, and then we move down very swiftly through here for wave 3. So that's the other possibility in there as well. There's still another one as well within here, and that is that it would move a little bit slower. This is still wave 4 here, and this is a little 1, 2, 3 here, and still a wave 4 here, and then would be looking at the wave 5 moving down. This would be down for wave 1 here, back for wave 2, down for 3 here, 4 and 5, and so on down through here. So they're all bearish, and that much we've understood. In terms of trading this, basically we would, if you're going short, then you would need to have this the stop above these highs here, and the reason for that is that if in both bearish counts we've got, apart from the triangle, if this was going to move down through here, then it wouldn't breach the top of this wave 2 here. Maybe we can just get a better picture here, right? So on the 1 hour chart here, then the 5 waves that we've been working through here, and then the ABC here, and I've put this as wave 1 here and wave 2 to here, and wave 1 and 2 and so forth. So if the market came back up through here, if we're going to get a triangle pattern, then it will take that high out through here as such. So that means that just moving that here, if we got the triangle pattern, it would be, as I mentioned, the A, the B, the C, the D here, and then the E wave would pull back up 50 or 60% through here before we got this move down through here. So at that point, that high point there is where we would be wrong in terms of if we're dealing with the triangle pattern, which would be here. So what we could do here also is that in terms of, to get a bit closer to the market rather than having the stop way up here, is that you could, well, first of all, it doesn't really actually need to be that high. It can be down to, in fact, it can be to that point there. So that's one place you could have the stop. The second thing is that this will retest the 72 here by the looks of it, because it's still in group 2 here, the 65, 72 and the 80. And This retesting would probably fail at this point here, so you could sell at that point there and keep the stop above there. That would be reasonable. The other point too, if it doesn't go that far back up and it moves down through here and then retest the 65, then you can sell it at that point and keep the stop above the 72 there. So 73 or 76 or something like that would suffice at that point there as well. Yeah, you just need to work through that. If as it does move to the downside, once it may not retest the 72 there because of the third wave coming down through here, but if it does that, you can catch it there. Otherwise, you've got to catch it under the 65 here. Once it hits the 50 here, we'd have to expect it to bounce back to the 60 and possibly the 65. Probably more likely this low here of 1360 to hit the 50, come back and hit the 60, and then start having sort of lower highs in a way as well. So when if this moves through here, it will eventually find that as resistance here. End up moving down through here, and through the 360 will do the same. So if it comes back and hits the 360, what normally happens, it gets a series of lower highs through here. So as soon as you got those lower highs, you know that it's going to drop down from that point there, and it is this. The 40 is important, but this 30 is more important here, and that you'll have to navigate around this here, of course. But once it hits the 30, then it normally comes back to the 40 there. So you still need to keep if you're going down to the 20s and the 10s and the 1300s, you need to keep the stop above the previous level until the 330 becomes the retested resistance at that stage. Once that's been done, and then the market's down at the 320 and so forth, then you can move the stop down. But it's going to get bumpy in the 10, 20 and 30 here. That's why you need to leave the stop above the 50. Once the 20 becomes the resistance, then you can bring it down above the 30 at some odd number, and so forth there. So look, a good opportunity in gold here, and we can start looking at gold stocks as well. In our ASX Elliott Wave trades, we are still short in gold in those markets, so that's fine there, but you can certainly look to add to those positions. Alrighty, let's have a look at FX. Okay, sorry I don't have the wave counts on here, as I mentioned, I've lost them there, but anyway, look, the US dollar here, as you can see, this price action through here, we're getting close to the 80 down here, so there's going to be support, there's going to be a bounce, and so forth. So we can see that this is actually slowing. This is an 8-hour chart here. It's slowing down through here. Sure, there can be another drop through here, but the point is that the speed of the market it was speeding up, and now it's slowing down. So there will be a bounce. We could sort of drill in here a bit further to this area through here. We know that 81 is a resistance point through here, so that's significant within itself through here. So any retest up here could fail again and have another move down through here. But as I mentioned, I know it's slowing down, so that means the euro will be topping as well. So we can use this is group 2 here. So we could say to ourselves, we could not be long on the euro while this market is above 80.72 here, above group 2 here. Okay, so that's a very fine line that you can use at this point here. Let's just see how that retest of this particular move down here, which would be in 5 waves as well. So let's see if this develops in 5 waves or 3 waves up here. Looking at that, and then looking at the euro here as well. The 134 and 135 area is the target area. What we're looking for here is we're looking at this being a wave 1 down here, and then the A, the B, and the C wave up through here. We're looking at the last Fibonacci retracement level up here at the 135, which would be the 78.6, which is also the 138 extension of the wave A here as well. So an A, a B, and a C up through here. But then what we need to see then at that point is once we've got that high in, and we'll talk about that, we'll talk about the details in here in a moment. But we do need to see a clear move down through here after that, and we do need to see it in a 5-wave structure, because once we've got a 5-wave structure here, we'll get a 3-wave counter trend as such, and then we'll be looking to short from this point in here. So that's what we're looking for there, and that would be the main trade at this stage. So that's what we're looking for in sort of breaking this down through here. This is a C wave here, so essentially we're looking for wave 1, wave 2, wave 3 that may already be in place at the moment, wave 4 and wave 5 up to here. That's what we're looking for there. So if we have a look at it here a little bit, we're looking for the wave 1, the wave 2. This is possibly the wave 3 to here, and the wave 4 to here, and the wave 5 right to here, and it could be complete just here. If that's not the case, then we've put a couple of intraday wave counts in here, and they would be the third wave this would still be the third wave here at the top here. However, we would be looking at this as being an A wave to here, a B wave to here, a C wave to here, and then the 5th wave up through to here, and completing at that stage there. So that's what the other side, either that's the top there, or we've got this here to go. That's what we're not sure about. So we just need to sort of have a look in there. In terms of trading this at the 134 here, then, well, the other thing too is this price action coming up through here. It is messy, but also you can see how it's got overlapping wave structures in here, all through here. So it's more like a corrective move, and that's why we were thinking that it's either the B wave or it's the end of the trend. And but in terms of trading this, the 80.72 in terms of the US dollar is important, and also this here as well, just on sort of 10-minute chart, you can break it down further. Now that it's moved down below the 134 there, if it manages to find support later on back up through here, then you can take that trade to the upside through there. But of course, you'll be in 10, 20, and 30 here, all of group 1 here. So you just trade to the 30 and get out, and because there would be some type of corrective move across here, and after that, if it found support on top of the 30, then you can move from that point there. So anyway, just see how you go there, because this does appear to be corrective at this point here. So allow that's finishing off for the end of the session. So allow that to finish, but a move back up on the 134 there would create the long trade. I mean, we are getting series of 5th waves, 5 wave structures up to the upside here. So it is still positive, but there is overlapping wave structures, and there is a topping process sort of unfolding now. We need to be mindful of that. The Australian dollar is pretty much sort of on track. I've got the daily chart here, so might as well start from here today. So we're treating this down here as wave 1, wave 2, and then wave 3 here, okay? Now, wave 4 would be back to the wave 4 of 1 lesser degree. So we've got 1, 2, 3, 4 here, and then down for 5 here for the third wave. So we'd be looking for an A wave here, B wave pulling back 61.8% to the 94.50. I think that low is 94.40 there, and then a C wave up to here. That's what we're looking for there. Once that's complete, then we'll see the 5th wave come down, which should be the same length as as wave 1 here. So that's part of what we can use through there. So look, we're in this A, B, and C here, as you know, and this is it here. So it is possible for this move here to be the A, B, and C as well, to be finished there and roll on down through there. But we just need a little bit more sort of confirmation if that's going to be the case, because at the moment, if this is the, I'll just keep this simple here, if this is the A wave here, then this here would be the B wave here, 61.8% and the C wave up through here. But in looking at this a little bit closer through here, I can see that we've got, from this point here, we've got, this would be the A wave down to here, then the A, B and C for the B wave here, because the B wave's in 3 waves, and then the C wave would be down for 1, back for 2, down for 3, back for 4 and down for 5. So we can get a new load coming in here before we see any further upside there. So that's what we're looking for, be mindful of that. So just drilling in here a little bit closer through this. So this is, see, this would be the A wave to here, then the A, the B and the C wave here, because we've got a nice 5 waves here. So that's like the C of the B wave, and you can see here that we've got 5 waves down through here, so we'd have to treat this as down for wave 1, and then wave 2 here, wave 3 here looking a little bit short, and wave 4 here, and then wave 5 here. Now, just drilling into that a little bit further through here as well, is that this current move to the upside here, this little guy here, is in 3 waves so far, isn't it? So we can see that we've got 1, 2 and 3 here. So that can be the A, the B and the C here, but then it would need to move lower from that point there. But it does appear to be a bit of a sort of a corrective move to the downside as such. So in this little move through here, it does look corrective through here at this stage here. So we may end up getting 5 waves up through here. And if that's the case, if we get this, 1, 2, 3 here, 4 to here, then we get 5 to here, then we know that we'll get an A and a B and a C across here, and then we'll start looking further to the upside. And we know that that 61.8 retracement level is in place at that point there, but we would need that 1, 2, 3, 4, 5 to here, A, B, C, 1, 2, 3, and so on to the upside. But as it stands, we do have 3 waves up through there. So normally the wave 4 here wouldn't pull down into the top of wave 1 here. If that's the case and it does that, then we know that we're on the track of moving down here further, and the short trade would come in at the 72 here. So the short trade would be this would be down for 1, 2, there'll be some sort of 3rd wave, 4th wave, 5th wave, and then there'll be some sort of retest of this area through here. So then it's up to you to work out what's the best way to work out when that is the retested resistance and working down through here. But we're looking for a shorter move than this one here at this stage. So it'd be shorter than this move here as such. So the target would be 94, if not even shorter from that point there, depending on what else is sort of happening at that stage. So a short trade on a double retest of 72, and a long trade after you can see a 5-wave price action here, then an ABC through here, and then just start scaling in and moving up through that way, because we'll be looking to go from 95 up to close to 98 in a large 5-wave sequence. So I think that would be a nice trade, so see how that goes. Alrighty, well, good morning, good luck, and enjoy the day ahead.